please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Sonia Shenoy. Sonia, good afternoon. And after a slight bit of dip after opening at record levels, well, the markets are back on the frenzy and really near the highest point of the day at the moment. Sensex, though, at 35,700 levels that were conquered, it's way below that at the moment, but 0.3% up. What's really also doing well is the mid-cap universe, which had really been jittery in the past week as well. Nifty Bank is underperforming the rest of the key indices, but one counter on my radar is definitely Reliance Industries, has been roaring ahead in the last few minutes of trade, has really attained greater heights at the moment, over 4% up.
Yes, in fact, hi Nisha, afternoon. It's not just oil and gas, right? Of course, Reliance and ONGC are topping the charts for reason of their own. But once again, the technology space has come back on the buyer's radar. So we saw all of last week technology top the charts, and this week as well. Whether you look at TCS, you look at Tech Mahindra, a whole host of these companies are up anywhere between 1 to 3%. So it looks pretty good, the screen. The kind of gains we saw last week, the momentum continues this week as well. Across the globe, Asian markets have ended slightly lower as investors eye political developments in the United States, with the government shutdown entering its third day as the Senate has failed to reach any kind of funding deal. The central banks will be in focus this week as well, with the Bank of Japan beginning a two-day meeting today where economists expect the policy to be unchanged. And Europe, the markets are all set to open in just a while from now. They are set to open mixed as Germany makes progress towards forming the next coalition government very soon.
All right, so that was about the global market, Sonia. But remember, we have an exclusive opinion also coming in on India, and that exclusive is coming in from the sidelines of IRMA 2018 that happened late last week. And Lata Venkatesh caught up with renowned economist Nouriel Roubini, and he says that the government should stick to its plan of lowering fiscal deficit. Here's a slice of that exclusive conversation.
My advice will be that, first of all, the budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level, and therefore fiscal prudence is necessary. And the risk is that even if you wanted to do a fiscal stimulus as a way of boosting economic activity, what you have observed in the last few months has been the long-term interest rates in India have gone higher, and have gone higher not just because of global factors, but more importantly because there was a concern that the fiscal deficits are too high.
Okay, that's the word coming in from Nouriel Roubini. But getting back to our own markets now, the two stocks in focus today are ONGC and HPCL. After ONGC bought the government's entire 51.1% stake in HPCL for almost 37,000 crores, this mega deal now ensures that the government not only crosses its FY18 divestment target of 72,500 crores, but revises it to 92,000 crores. We spoke to the managements of both the companies earlier. Listen in to what they had to say.
Part of this funding we'll do it from our internal accruals. Then, as you rightly said, that we have stocks of IOCL and GAIL. And apart from this, we have taken required approval from the board for short-term borrowing. We have tied up all these the borrowings with different banks. So, you know that the stocks together we have something like 25 to 30,000 crores. Banks, we have tied up close to 50,000 crores of short-term borrowing. As of now, we have all these options open. First, we'll definitely access our internal accrual, how much, whatever amount we decide we can spare, and thereafter we'll work it out, whichever works out beneficial for us.
It is a logical thing to do because MRPL is a standalone refinery with no marketing arm, and HPCL has got a more marketing capacity than the refining capacity. Last year we sold around 35.2 million metric ton, while our refinery capacities are shorter than that. So having MRPL along with us helps us in bridging that gap. HPCL, ONGC and MRPL board have to sit together and decide. The formal discussion on that have to start. But I believe that if there is a value which can be created, we should try to make an effort to do it the earliest possible.
All right, so that was a large transaction, a big deal in the oil and gas space, which really got announced over the weekend. Now, Deepam Sekhi, Neeraj Gupta exclusively told CNBC TV18 that this acquisition is in line with government's commitment to efficiently manage its investments in CPSEs and also value of its enterprises in this particular space.
And on ONGC, the DIPAM secretary says, that is the Department of Divestment secretary says, this is a dream acquisition for ONGC, through which it's got access to middle and downstream operations in the oil and gas value chain. It can now improve on economic and operational efficiencies through further consolidation within its group companies.
And on part of HPCL, well, he says that HPCL will continue to be a separately listed entity, professionally board managed CPSE, as well as also a part of a large oil and gas group, can really exercise various possibilities of economic expansion within and also outside the group companies.
Numbers from GNFC, by the way, the net profit has zoomed to almost 230 odd crores. But look at that, you also have a good revenue jump. In fact, most of these commodity companies have done pretty well this quarter. The EBITDA has doubled on a year-on-year basis. Very good numbers, that's what I said, coming in up almost about 4% on that particular counter. But let's get back to the markets then. 130 points higher on the Sensex, and the Nifty still holding with gains of almost about 0.2%. There are a couple of big earnings that are expected just a while from now. We're awaiting Axis Bank's numbers that will come out in just, minutes from now maybe. And over there, the non-watch list slippages is something that you need to focus on very closely after the big hammering it got last quarter. But let's go across first to Mangalam and find out how Asian Paints numbers will look. Mangalam, the streak has been positive so far with all the companies you've tracked, whether it's HUL, Jubilant Foods. Will Asian Paints also do the trick?
Well, the streak didn't do too well as far as paints are concerned. Sonia, Kansai Nerolac came on Friday, and the margins, that was a bit of a disappointment, primarily because this sharp rally that we've seen in crude, up about 23% year-on-year, 19% quarter-on-quarter itself. But Asian Paints enjoys the favorable base that it has. We're working with about 11 to 12% on the volume growth number. As far as revenues are concerned, we're looking at around 16.5% on the top line, consolidated, adjusted for excise in the base quarter. Margins, the EBITDA is likely to grow a little slower than the revenue growth. 14.5% is what we're expecting on the EBITDA. Margins are likely to come down by about 30 basis points, though there is a downside risk given Kansai's numbers as well and their management commentary. More importantly, I'll be watching out for the paints volume growth. If anything above 12%, the company does not specify the exact volume growth number, but if they do say it's teens or mid-teens, that would be a positive. Low double digits is something that is baked in the price as well. The stock has been an underperformer in the paint sector, but if it does surprise, then there is a possibility of an upside for Asian Paints.
All right, so those numbers will be watched out for, but GNFC is really going up over 6% right now, and EBITDA margins, they have really been ramped up 27% on a YOY basis versus under 18%. So that is a big number and a good set of numbers there, and therefore the stock is up over 6%. But we have some of the numbers, the large ones, especially coming in from the private bank space that we are watching out for. In fact, as Axis Bank is the next one which is on our radar, and stock is really up in trade ahead of those numbers. Abhishek has been really doing what could be expected from that particular counter. Abhishek.
Well, Nisha, the most important thing that will be watched in Axis Bank is the asset quality movement. Now, the total watch list stands about 7,150 crores, so that forms about 1.74% of the book. Remember that the original watch list actually started from 25,250 odd crores. So from there, 76.5% of that watch list has already slipped into NPA. Slippage from watch list will be seen closely, as I have mentioned. 76.5% of the original watch list has already slipped into NPA. But what I'll be focusing is more on the non-watch list. As Sonia mentioned earlier, the non-watch list slippages will be the key thing to monitor. Last quarter, they had divergence and that led to NPA. Now, this quarter, again, some of the analysts on street are expecting 4,000 to 4,300 crore of slippages. But we need to see how much of it comes from the non-watch list or the standard book. Apart from that, gross NPA, which was at 5.9% in the previous quarter, anything below 6% will be positive. Remember that net interest margin was at 3.45% and they raised capital in this current quarter. So anything above 3.5% in terms of net interest margin will be positive. Our polls suggest an NII growth of just 3.8%, while net profit to grow at 22%. But remember that the net profit our polls suggest is 706 crores. This is against the average run rate of 1,800 to 2,000 crore that Axis Bank used to record in their good times. Back to you.
Okay, well, we'll wait for that keenly. But for now, a couple of these stocks like Jubilant Foodworks have moved to the high point of trade. So there's definitely fresh money coming in post-noon into Jubilant Foodworks. Look at that, 7.5% higher now. And it has a couple of these other stocks like Mindtree for company. But you can't take your eyes off Reliance. It was a strong showing in this quarter. The petrochemical EBITDA grew 70%. Not just that, Rel Geo, we all know how that one turned profitable. Naveen is here with the highlights. And also, Naveen, what are the brokerages saying about how Reliance could move henceforth?
So Sonia, brokerage seems to be quite sanguine on Reliance Jio, given the fact that the numbers that the company posted. As you clearly pointed out, the highlights have been the EBIT margins that have come in for the petrochemical segment, as well as the PAT. The first time is what they have registered a profit for Jio at the PAT level. So these two are the key highlights. On a consolidated basis, the margins have come in at 17.6% versus an expectation of around 16.5%, clearly led by EBIT margin, Petrochem doing really well above expectations, as well as the realizations on the GRMs that have been stable. On the PAT front, the jump has been 16% at around 9,400 levels. Remember, the highest estimate on the street was again around 2,750 crore. So a big beat on the PAT also. Coming back to the Jio, remember, operational leverage seems to be clearly kicking in on the Jio numbers with a 162 million user base. They have been able to give an EBITDA of close to 2,500 crores. So that is one key positive. Also need to note that the other ancillary segments like your retail segment, that has posted an EBIT of close to 450 crores. So that is nevertheless noteworthy. Overall strong set of numbers, and that is one reason why you're seeing the stock 4% up in trade today. Also the brokerages, the likes of JP Morgan, they have a buy rating on the stock, and they believe that going ahead also we will be seeing more traction, and outlook seems to be positive. Also, before I end, I just want to address the GNFC numbers. We have seen a margin of close to 27% versus an 18% year-on-year. This is clearly because of the TDI prices. Remember, 80% of their profitability comes from TDI, and that has surged almost 40% in the last 1 year. So that has been clearly seeing into the numbers. But the interesting point to note will be, will they be able to repeat the Q4 numbers, given the fact that the TDI plant has been shut down indefinitely as of now? Back to you.
Okay, so that's an important point, Naveen, whether or not these numbers are sustainable. So yes, a very good performance in this particular quarter for GNFC, but is this sustainable? And coming back to Reliance Industries, also the Jio performance has been good, and the management did share that IUC cut has really reduced their overall expenses. And also remember, they took up tariff charges, extra tariff hike in the last quarter, but they've reduced the tariff in this quarter. So are these numbers sustainable is another thing, and standard disclaimer here as far as Reliance is concerned. Sonia. Axis Bank results are awaited in some time from now, but on to some news development. The pricing regime could get even more stringent going forward. That's the word coming in from NPPA Chairman Bhupendra Singh. In an exclusive chat with CNBC TV18's Priya Sheth, he also speaks about a new government policy that is in the works to monitor pricing of drugs and devices.
Government is trying to evolve a policy, some kind of trade margin to be placed in case of drugs and devices. And I'm hopeful that if that policy comes, then the NPPA will not be required to take isolated actions in case of certain drugs or devices. So let us hope that we have a new policy in which these distortions are eliminated, and we have a properly running market.
over the last year, you've also spoken about the draft pharma policy and the kind of recommendations that have been going to the government. At this point in time, can we expect a new policy to come in by 2018? 2019 was the expected timeline. Do you think it could come soon? Of course, the industry has been hopeful that it will be in their favor as well.
Yeah, government is working on that. I think we can hope that there will be a new pharma policy.
Okay, well, moving on, Prime Minister Modi, who left for Zurich a while ago, will be the first Indian Prime Minister to attend the World Economic Forum in Davos in the last 20 years. Such a proud moment for all of us. Prime Minister Modi's team includes 6 of his cabinet ministers. Over 100 CEOs, including Mukesh Ambani and Chanda Kochar, are expected to participate in a roundtable dinner organized for the interaction with global CEOs as well. Bollywood celebrities like Shah Rukh Khan and Karan Johar will also be present at Davos. Today, India is hosting a reception at the Congress Center.
All right, so that's a big event, Sonia. And of course, we'll also be getting all the big corporate voices straight from Davos. So keep an eye out on that one. With that, it's a wrap on this edition of Business Lunch. Mid-Cap Radar is coming up next.